Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call, Monday, the 20th of April, 2026. Look, best way to deal with this is Friday night we had peace. Iran opened the Hormuz Strait, and then since then we've had pretty severe escalation. So, as I say, probably best to go through. This was Friday night. The stocks were up, at 1%, fresh record highs. Oil companies down. The oil price dropped about 8% overall. The only real one that was down was Netflix on the back of their poor outlook, but everything else was extraordinarily green. Just going back here, we've had airstrikes continue in southern Lebanon. Israel hit a hospital with an airstrike, and they really don't seem to want this thing to end for whatever reason. So we got some outbound transits and inbound transits here, and we did see a spike, and we're getting up towards maybe 20 odd vessels, mainly bulk carriers, but a couple of oil tankers. And then since then, we've seen so Iran reclosed the strait within 24 hours of reopening it. The IRGC gunboats fired on commercial vessels, including 13 oil tankers that were forced to turn back into the Persian Gulf. And then the Navy's since seized an Iranian-flagged cargo ship, Touska, and it actually fired on its engine room and hit it. So, the first boarding of the week-old blockade, while Iran declared it has no plan to attend the next round of talks in Islamabad. So we've ended up coming out of this weekend, much worse off than where we were, and we've had that's been sort of reflected in futures. We've seen, on Friday we had the S&P and the Dow and the Nasdaq up anywhere from 1.72. S&P 1.21, Nasdaq 1.29, and the Russell up 2.15. They've all dropped around about it's 0.8% on average, I would say, overall. And we've seen oil prices up 6.5%, back up to $88. So it's really recouped nearly most of those. Although, look, it's still a positive night overall, even if you take out these futures moves that have happened this morning. I can't imagine that they're, that was obviously a pretty severe move to the upside. They've been pricing out the chance, they've been pricing out an extended war for probably a week or so now. That's why we're back to record highs. And, a percent push through record highs. And I would expect this thing to be much lower, because we're probably just been put back 2 weeks in this thing. We're now at 50 days to normal fuel supply, and we, both sides really starting to up the stakes in their aggression talks. So I would not be surprised to see this thing escalate somewhat further. The Israelis aren't really doing anyone any favors with those Lebanon bombings, and then the Iranians really are pretty happy to keep playing this asymmetric warfare and taking the Strait of Hormuz hostage. So, we are a long way from peace talks as it stands at the moment, and but we'll be sort of keeping an eye on it, I suppose. So, you're probably going to have to unwind some of this. Crude and things like that were obviously down quite a bit. I mean, that's a bit of an old one there, so it's really irrelevant. We do have earnings coming up. Pretty big, lot of earnings this week overall. So we've got United Health coming out. It'll be Tuesday night. That one's been under a fair bit of pressure. We've got a few of these defence stocks, the likes of RTX, GE Aerospace, coming out, Northrop Grumman, and they should have fairly reasonable results. I dare say that there'll be some increased defence spending, particularly some positivity, around the US is upping the stakes. They're more so Trump's very cranky with NATO and is looking to defund them as much as possible. So we're likely to see a bit of positivity around the defence stocks. Intuitive Surgical and that robotics is one of our faves here. You got the likes of Lam Research, Tesla, GE Vernova, Amazon. So two of the Mag 7 there, and then some of the oil companies here on the Friday night. Caterpillar, which is also very much categorised as a bellwether of the economy for the industrials. So it'd be a fairly interesting week from the in terms of the earnings side. So we don't tend to have too many movements around earnings season in terms of an index level, certainly not to the downside. So I've sort of, this doesn't surprise me that this hasn't gone significantly lower at this stage, but there certainly is plenty of room to move to the downside, I've got to say. If there's any sort of disappointments like there was with Netflix, I think we're going to start to see some of this optimism peel back. I don't see an opening for Trump to push a resolution. I mean, he's very conscious of the equity market. He makes these announcements, to make sure that the equity market finishes on weekly highs and things like that. But the way this thing stands at the moment, I mean, firing on an Iranian vessel, Israel flattening a hospital in Lebanon, and then and now both of them saying that the strait's closed. We are looking at. I mean, it's very hard to unwind in a couple of days. Iran has flatly said that they have no plans to go to this next round of talks. So I'm not sure how Trump's going to wiggle his way out of this one. Mind you, he's shown some genius moves so far and convinced the market that everything's going to be okay. But I just don't know how long that fairy tale can last this week. And it will be interesting to see if what distraction tactics the president brings to the table, because I think it's going to have to be in the form of something else. He's very good at lighting a fire when there's something he's lit. When he started a fire somewhere else, I wouldn't be surprised to see another major issue sort of start to steal the headlines and distract from this ongoing geopolitical situation. So I mean, we're sort of very happily in cash here at the moment at MPC. We've gone relatively conservative. We didn't buy anything in the last fall away around, except those sort of software names which have done very well. But we're just really not in the headspace where we think that looking at the facts that this is going to unwind itself anytime soon. And then I think the knock-on effects of this thing being 50 days returning to normal, I think the economic numbers are going to hurt us down the line. So we're going to see some inflation numbers. And possibly some softening in economic and consumer spending, just on the back of the fact that gas prices and things are through the roof in the US. So we did a bit of an ease in petrol prices this weekend in Australia, but how long that goes on is be a different matter. But there's no economic numbers really this week, so we will probably be fairly focused on earnings. So probably just be mindful that to not get maybe too bearish. I think oil's probably a very good buying opportunity down here at some stage. Those oil stocks and energy stocks came back pretty hard here in Australia to levels below almost pre this whole conflict starting. So what we are focused on though is there's a really good statistical opportunity coming up for the long-term player, particularly in the index ETFs or the indexes. We're doing a strategy called Buy the Dip in the S&P 500 index, and essentially it has what's called a look back on it, and you will get the weekly low and on the chosen day. So if it be a Monday or a Friday, that's when the lowest Monday or Friday close in the S&P between mid-May to mid-October. So and then you're long for basically that there's that observation period for the first 6 months, and then you're long for the preceding 2.5 years. So it's a 3-year index investment. with these midterms on, there's usually a dip of around about, on average, 17% leading into the midterms at based on the stats. And, overwhelmingly, if you combine those midterm stats, that 6-month period, this is one of the better periods to be buying the dip statistically over the course of 4 years in the index, because, as we know, indexes tend to bounce back pretty nicely. So scan that code, go and have a look at the landing page. There's a video there. And at the moment, we're very happy to be patient and sit on our hands. And this is what we're looking at doing. And you'll get some, because there's options involved in it. You're going to get around about the 5.8 times leverage, on to the upside, and those index investments are a good backbone or a good spine of your portfolio moving forward. So it's very opportunistic, sort of looking past Trump and sort of saying, well, Trump's very motivated by the stock market. So this is a very timely strategy whereby, play into that weakness in the midterms and then try to play, what they call the Trump put, and take advantage of him doing everything he possibly can to get that equity market up for his own personal wealth and all the favors he's doling out around town over the course of the preceding sort of 2 years and 9 months. You can exit early, but really only from beyond the 6 month to 12 months period. But it'd be the sort of thing that most people will be holding index ETFs in their portfolios. This is a great way to just utilize the leverage, utilize the advantage of buying the dip when everyone else is panicking. And locking in and setting in that plan based on historical statistics from going back to 19, and going from the you can replace some of those index ETFs with this, which is very capital efficient. You don't have to put down as much capital. So yeah, people will have a pretty weak open, I would imagine. Gold and silver down as well, a couple of % here. So yeah, just be a little bit wary on the open, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.